Okay, so good afternoon, everyone. And this afternoon, we'll be looking at two major topics. So let's look at what we'll be treating today. So in today's training, we'll be looking at two major topics. And remember, I said since yesterday, we started on the technical analysis. For those that joined my class, we've been on technical analysis. And if you remember, I said technical analysis is basically the study of price movements. Basically the study of price movements. And yesterday, I said when it comes to price movement, there are different ways you can study price movements. The first one is using the technical tools. We talk about using the technical tools to study price movement. And if you can remember, under the technical tools, I mentioned the Fibonacci. And under Fibonacci, we have different types of Fibonacci. The first one is the Fibonacci retracement. The second one is the Fibonacci arc. And the third one is the Fibonacci expansion. So these are two under the technical tools when it comes to analyzing the market. That is, remember I said technical analysis is the study. This is the study of price movement. The study of this is the study of price movement. So when you now come to studying price, you now say there are different ways. There are different ways. The first one is the technical tools. So under the technical tools, we have the Fibonacci, and under the Fibonacci, we have the Fibonacci retracement, and we have the Fibonacci expansion. We have arc. Then the second way is the Andrew pitchfork. This is another way you can study price movement. We have the Andrew pitchfork. But basically, remember, for those that joined my yesterday's class, I said, if I promise you that we're going to teach you everything, I just deceived you. So I'm giving you this information so that you can do your own research. So basically what we are doing is just giving you the information. So apart from the technical tools, when it comes to price analysis, the study of price movement, another way you can study is by using price action. That is another way you can determine price movement, by using price action. Now, under price action, we have different ways also. The first one is by using the market structure. We have the market structure. We have a second way is using support and resistance. Also, another way we can study the market is by using candlestick reversal rejection pattern. Candlestick rejection pattern. This is another way to analyze and study price movement. Also, we have chart patterns. We have Elliott wave. All these are different ways to study price movement. And lastly, what I will just mention is we have the harmonic price pattern. All these are different ways that you can analyze to study price movement. Now, lastly, we talk about the indicators. That is how you can use the indicators to study price movement. And I said under the indicators, we have two different categories. We have the default indicators, which is the one that comes with your MC4. And the second one is the custom indicators. And these are indicators you have reasons to buy when you go into the industry. So when you, as you go in the industry, you get to a level in which you're going to see someone come to meet you and tell you, oh, I sell indicators. So when you see someone, it shouldn't be new to you. Yeah, you have issues, you will find yourself in situations in which you want to buy indicators. All these are ways to study price movement. So, and I may not be able to teach you everything, but we will try to open your eyes to some. So basically, Yesterday, we talked about indicator, and we look at how we can use indicator to study price movement. Now, today, we'll be looking at price action. Price action. Now, under the price action, we'll be looking at the first two. That is what we'll be looking at today. We'll be looking at the first two, which is the market structure, and support and resistance. God helping us, we'll touch these two topics, support and resistance. So these are the two topics we want to quickly look at for today's class. If we are together, please type in yes on the chat box. Okay, so I've cleaned this up. Good. Yes, good. Okay. Now, I've cleaned this up, so let's stick to what we start. Now, we'll start by saying, looking at what support and resistance is. So we'll start by looking at support and resistance. Now, the question is, what exactly is support and resistance? Now, support and resistance can be defined as areas that tend to act as barriers to price. That's what I love to give as my definition. Support and resistance are areas that tend to act as barriers to price. Now, what do I mean by that? What do I mean by this? Support and resistance are areas that tend to act as barriers. Now, for those that have taken their time to look at how price move, you will notice, maybe you've been studying price, you notice that price has been going up. Nicely, it has been going up. Now, all of a sudden, it will get to a point and you notice price is falling. You will see someone now ask this question: what made price to fall at this point? Probably, most people, what makes me laugh is most people, it will be at this point. Probably it is at this point that some people entered the market. Maybe that was when you joined this up move. And I say, why is it that it was when I jumped into the market that price begins to come down? You now conclude that the market is watching you, is waiting for you. Now, it doesn't work that way. Price has been going up. All of a sudden, at this point, all of a sudden, you notice that when price got to this point, it started to come down. Now, the question is, what stops price from going further up? Why is price not going up? Now, what this means is this: there is a barrier at this point that is stopping price from going up. There's a barrier. There's a barrier. And what this means is this: when you are unable to identify this barrier, you will be surprised and say, why is price just stopping me out? Why is it that anytime I enter, that is when I get the trade begins to go against my direction? It is because you are not taking note of what we call support and resistance. Now, the price stop, it's not automatic. It means that something is stopping price, and that is why we call it a barrier. Now, the question is, how do you identify this barrier as a trader? Now, to identify this barrier, what you will do is this: when you notice price has stopped at a particular point, just take an horizontal line, use it to draw a straight line at the point where price stopped. Now, when you draw this, the next thing is begin to look backward, begin to look historical, look previously. When price got to this point, what did price do? When price gets to this point, what has it done before? Now, it's possible when you begin to look historical, you will notice that probably there was a time price was dropping, and when it got to this point, what happened? Price began to go up. Now, the truth is this: price don't just stop. It means that because as a technical trader, we have a philosophy, and the philosophy is this: what price has done before has the possibility of repeating itself. That is the philosophy of a technician, that is of a technical trader. The belief that price repeats what it has done before. So it is now left for you to be able to identify what price has really done before. And that is one way of identifying it, support and resistance. So now, when you notice price has stopped at a particular point, all you need to do is pick a straight line to draw that point, then go backwards, go historical. When you go backwards, when you go historical, you will be able to observe that price has obeyed that point at one time or at one point or the other. Now, does this mean that any straight line you draw is a support or a resistance? No, there are conditions to this. And what is the condition? The condition is that you should be able to find a minimum of 2 points at previous occurrences, at previous time, previous history, that price got to that point and it reverses. I repeat, for you to say this straight line you have drawn is valid, for you to say this support or this resistance that you have drawn is valid, you should be able to look historical. When price got to this point at history, did it reverse either upward or downward? Now, the moment you have been able to see that price got to this point and it reverses, then it means that it has the possibility of repeating history. If you are with me, please type in yes on the chat box. If you are with me, please type in yes on the chat box. Thank you, Mr. Rapp. Mr. Kenny, are we together? Mr. Kenny, are we together? Because I'm not hearing from you. I want to be sure you are with me. Are we together, Mr. Kenny? Kenneth. Support or resistance. Now, the moment that you are able to identify that, oh, at previous occurrences, price got to this point and reverses, then it makes this straight line a valid support or resistance. Now, another thing I want you to understand is this: the higher the time frame, of where you are looking for support and resistance, the stronger the support or the resistance. The higher the time frame, the stronger the support or resistance. Now, this means that if you see a support or a resistance on a daily time frame, it tends to be more stronger than the support or resistance on a 1 hour time frame. When you see a support or a resistance on a weekly time frame, it tends to be stronger than the support or resistance on a daily time frame. So the stronger, the higher the time frame where you're seeing or where you're spotting this support or resistance, the stronger the level of support or resistance. Now, the second thing I would like to say is this. Most people you will notice that I am saying support and resistance. The question is, what makes support different from resistance? What makes support different from resistance? What makes it different has to do with what? The current price. So you need to first identify the current price. You need to be able to identify the current price. Now, if you are able to identify the current price, let's assume that these are support or resistance. Any straight line that you draw that is below, let's assume this circle is the current price. Any straight line that you draw that is below this that is below the current price is known as support. Any straight line that is below the current price is known as support. Then any straight line that is above the current price is known as resistance. This is how to differentiate support from resistance. Any straight line that is below the current price is support, and this dotted line is the current price. So any straight line that is below the current price is support, while any horizontal line that is above the current price is a resistance. Are we together? Now, another thing I want you to understand is this, that I'm saying support and resistance draw a straight line does not mean that that support and resistance is a straight line, is a point, is a number. support and resistance should be seen as a zone. It should be referred to as a zone. And remember, when you say a zone, it means that it's a period, it's not a straight line. It has to do with a period of at a particular point. So you could draw a rectangle to determine, meaning that the moment price is still within this point, you cannot conclude that it has broken until you now see price breaks above it. That is when you conclude. So support and resistance is not a straight line, it is a zone. And what do you take cognizance of when you're talking about the zone? You take cognizance of the tip of the body as well as the shadow of that price. So that you see a shadow or you see a candle doesn't mean that it is only the body of the candle you take cognizance of. You must take cognizance of both the body. So if we have body here, and let's say we have the shadow here, I will take cognizance of both the shadow and the body. Both the shadow and the body, because the shadow, for you to see a shadow, it means that price got there. The only thing is that it went down a bit before it closes. So when you are drawing support and resistance, it shouldn't be just like a straight line. You should be able to use a zone, taking cognizance of both the body as well as the shadow. As well as the shadow. Are we together? Okay. So let me see. Let me try and let me show you my chart, and let's try and draw support and resistance. Let me show you my chart, and let's try to draw support and resistance. Okay, you can see my chart. If you can see my chart, please wave your hands. If you can see my chart, please wave your hands. Okay, good. Now, from this chart, I would prefer, when I want to draw support and resistance, I prefer to go to a much higher time frame, like a weekly time frame. Like a weekly time frame. So we are on a weekly time frame. Now, look at this. You will notice, if you look at this closely, you will notice, let's start from here. Price came down here. And what happened? At this point, it went up. Price came down again here. And from here, what happened? It went up. Every point support, every point of reversals is important, especially when you come to a higher time frame. Every point of reversal. So if I want to draw support and resistance, let me remove all this and try to now draw my support and resistance. Every point of reversals, especially when you come to a higher time frame, is important. So if I pick my horizontal line here and I put one here, look at this. Price got here, it reverses. Look at this. It got here again, it went up. It's important. Now let me pick another one. Let me put it here. Look at it. Look at it. Price got here, what happened? It went up. Price got here, it went up. Price got here, it went up. Look at it. Price got here, it went up. And what is it? We can see that price is currently here. So we now watch it. Will price break it or will it go up? Now, another point is, if we pick this, you can see price got here, it came down. 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 It got here, it came back. It got here, it came down. We pick another one. Every point on the higher time frame is important. Look at this. Price got here, it came down. Price got here, it came down. You can see every point of reversals on a higher time frame is important. Every point of reversals is important. So you can draw as many support or resistance you can see on a point or at a time. Look at this. Price got here, it came down. Price got here around this side, it came down. Around this side, look at it. Around this side, it came down. So every point of support or resistance is important when it comes to drawing support and resistance. So if you look at this, now you may feel what I'm drawing is small. If I try to look at this small point from here to here, this is 72 pips. This is a big money, 72 pips. Now, remember we are on a weekly time frame. Now, the essence of this is from here, you now go to a 4 hours or maybe a 1 hour and begin to look at it. What is price doing when it gets to this point? So we can see that from here, let's see. If we pick it from here, and we go to 1 hour, we can see that price got to this support and it's like it's coming down back. So you can see price got here and we can see that buyers took over and it's coming back. And this is how support or resistance work. This is how support or resistance work. So we can see what we drew is on a weekly time frame, but if you come to a lower time frame, you will be able to see much more. See, another point is here. See, another point is here. You can see we just drew this. Look at it here. So if you go to every time frame you find yourself, you'll be able to draw. If you go to 4 hours, you'll be able to draw different support and resistance. Every point of reversals is support and resistance. Please, if you understand this, just type in 1 on the chat box. If you understand this, please type in 1 on the chat box. And if you think you can search for this on your own, please type in 1. All you need to do is look for points of reversals. Look out for points of reversals. And that is how you identify support or resistance. Now, let's go to the next topic. Let's go to the next topic, which is market structure. Market structure. Okay, before we go there, let me share my chart and now talk about you differentiating support from resistance. You differentiating support from resistance. Okay, remember I said to differentiate support from resistance, you need to identify the current price. Now, if you look at this point, this is the current price, this gray line. So this line that I drew now, because the line is below the current price, all this line will be support. Why all this line I drew above here, they are known as resistance. If we go to a 4 hours or a daily time frame, if we have any line that I drew below, they are known as support. But the moment those lines are above the current price, then they are known as resistance. So all these ones are resistance, while this one below the current price is known as support. Okay, good. Welcome, Mr. Kenneth. I've been trying to confirm if we are together, but at least thank God you are back. So that is for support and resistance. Let's go to the next topic, which is trend market structure. So under the market structure, we now look at how the market moves. Now, market structure basically tells us the movement of the market. Market structure helps us to determine the movement of the market. And when we are trying to study the movement of the market moves in 3 different patterns. The market moves in 3 different patterns. The first one is what? We call it an uptrend. An uptrend or an upward trend. Now, when the market is in an uptrend, it means that the market is doing more of a buy. When the market is in an uptrend, it means that the market is doing more of a buy, meaning that what? Buyers are in control of the market. The second one is what we call a downtrend or a downward trend. So when we are in a downward trend, it means that the market is doing more of a sell. When we are in a downward trend, it means that the market is doing more of a sell. So the sellers are in control of the market. The sellers are in control of the market. And the third one is a sideways trend. The third one is a sideways. And when we are in a sideways, it means that the market is either, we call it ranging, or we call it consolidating. Consolidating. Some will call it accumulation. Some will call it accumulation. So all these just tells us that the market is ranging. All this is telling us that the market is ranging. So these are the 3 ways the market moves. And I do tell traders, until you are able to identify the market structure, then you shouldn't trade. Now, when the market is in an uptrend, the market will form what we call an higher high. The market will continue to form what we call an higher high and an higher low. market will continue to form what we call an higher highs and higher lows. So we'll call this HL, sorry, and we'll call this HH, higher highs and higher low, when the market is in an uptrend. Now, why the second one? When the market is in a downtrend, its market will continue to form a lower low and a lower high. So the market will form a lower low and a lower high. Then when we now talk about ranging, it's just sideways, then it's ranging consolidation, consolidating underline. Now let's go to example. Let's pick some examples. Let me clear this. Okay, now let me pick an example. For you to identify, let's start with an uptrend. How do you identify an uptrend? How do you identify? Remember I said an uptrend will be forming higher highs and higher low. How do you identify an uptrend? To identify an uptrend, the first thing you need to do is what? Identify the highest point price has gotten to. Then identify the lowest point price has gotten to. That is the first thing. Identify the highest point price has gotten to and identify the lowest point price has gotten to. That is the first thing you should do. Now, the moment you do this, what is next? Then begin to watch. Market could come here, but if it doesn't break this low, then we continue to wait. The market may go up. The market may go up to this point. If it doesn't break this, I continue to wait. The market may come again like this, and then maybe comes and break this. The moment the market breaks this high, it has just given us an information that it's possible an uptrend has started. Now the question is, when you see this, will you jump into it? The answer is no, you won't jump. You won't jump. What you do is what? You will continue to watch. Now, what are you watching? You continue to watch the market do this. You will continue to watch the market do this. Now, let's assume it has broken. It will go up. The moment the market gets to a point and begins to go down, this is what you are watching to. Remember, this previous point is the high. Now, this new point, this point before the market begins to come down is what we call the higher high. Why do we call it the higher high? Because we can see that this is a high, but it is higher than this previous high. That is why that is where it got its name, higher high from. Because you can see that this high is higher than the previous high. And that is where we got the name higher high from. Are we together? Then, what are you waiting for? When the market begins to go down, one thing you will be watching is the market will not get to this point. It may begin to go down, but it won't get to the previous low before it begins to go up again. So what this means is what? What this means is this point is what we call the higher low. Why do we call it the higher low? Because we see that it is higher than the previous low. It is a low, but we can see that this low is higher than the previous low. And that is why we call it the higher low. Then, so what this means is an uptrend will continue to form an high. So the moment price begins to go up again and it breaks this previous high, another new higher high has formed. Then you just continue to watch it, and when price comes down again, it will not get to this previous high before it goes up again and break this previous high. So that is why we said an uptrend will continue to form an higher high and, oh, sorry, this is higher high. I will call this an higher low. So we'll call this an higher low. So that's why we say an uptrend will continue to form an higher highs and an higher low. So until the market stops to form these, it's still in an uptrend. Now, how do you know when an uptrend wants to end? The moment, let's assume the market now comes back down. Remember, it goes like this, and from here, it breaks again, form a new higher highs and higher lows. Now, if the market now comes like this and gets to this previous higher low, then this is an information. Now, this information is not telling us that an uptrend has ended. No, that is not what it's telling us. This information is not telling us that an uptrend has ended. This information is only telling us that it is possible that the market wants to consolidate. So now the market could now do, it do something like this again. Then the market would do something like this, come back, but it's unable to break this point again. It's unable to break the previous high. Now, the moment the market is doing something, it is only ranging. You can see it's ranging between this point and this point. It is only ranging. Now, what will you do? You will continue to watch it until either the market breaks this up again or breaks this down. Now, if it breaks this up, let me explain this. If it breaks this up, it just means that the market ranged for some period, and what happened? An uptrend continues if it breaks this upward. But if the market is able to now break this downward, what this means is what? The market is ready to change the trend. So a trend change the moment the market is able to break a higher low. And for you to join a particular trend, the right time to always join a trend is at the point of the higher low. So if you want to join the market, the right time to join is using the higher low. But if it now breaks the higher low, then it means that an uptrend has ended. Please, if you understand this, type in yes on the chat box. If you understand this, please type in yes on the chat box. If you understand this, please type in yes on the chat box. Okay. Now let's go to the next one, which is a downtrend. And remember, I said for a downtrend will be forming a lower low and a lower high. A downtrend will be forming a lower low and a lower high. To start this, you should also need to identify the highest point price has gotten to and the lowest point. The highest point price has gotten to and the lowest point price has gotten to. Now, when you do this, the next thing is for you to now wait to see what price we do next. So as we know, this is the high and this is the low. So when you do this, begin to wait to see where price will break next. Now, if price, let's assume price comes like this, goes like this, comes back again, then eventually was able to break the downward trend. This is a confirmation that what? A downtrend has started. This is a confirmation that a downtrend has started. Now, when you see this, will you jump into it? No. What will you wait for? You wait for market to go back a bit. The market, when it goes back, it will not get to this point if it's really on a downtrend before it does what? Before it continues another move. And this is now what we call the new lower high. Why do we call it the new lower high? Because we can see that it is a high, but it is lower than the previous high. Because it's a high, but it's lower than this previous high. That's why we call it a lower high. And before we can see that here is the new lower low, because it is a low lower than the previous low. And this new point is another low lower than the previous low, because we can see that it has broken this previous lower low. And we can see the moment price goes back again, if it's still on a downward trend, it will not get to this point. before what happens? Before it goes up, before it comes down again, forming a new lower low and lower high. But the moment the market now goes back and touch this previous lower high, then it's giving us an information that the market wants to consolidate a bit. So you just continue to watch it. But the moment it breaks downward, then it means what? An uptrend has started. An uptrend has started. So this is how to what? Identify the trend of a market. Okay, so now let's combine these two. We have talked about support and resistance and trend line and market structure. And remember, this has helped us to talk about a sideways trend. Look at this. All these are sideways. All these are sideways. All these are sideways. All these are sideways. And how do we identify this? Now, the truth is this. When the market moves, the market doesn't just move, or the market doesn't just go up like pew, up, or go down like pew. No, the market doesn't move like that. The market moves in waves. Market moves in what we call waves. And what do we mean by this? When the market moves, the first one is what we call the impulsive move. It will just give you a nice upward move, the impulsive move. Now, after this impulsive move, we now have period of consolidation. Period of consolidation. Now, it is this period of consolidation that you'll be waiting for the next high. You will identify the next high and the next low and wait for a breakout of it. Period of consolidation. We have period of consolidation like this. And after this, the market can either now break up or break down, depending on what the market wants to do next. So let's see some examples. Let's see some examples. Let me share my chart and let's begin to analyze the market. Let me begin to analyze the market. Let me remove all this support and resistance. Remove objects. Based on our explanation, who can tell me what is the structure of this market? Based on our explanation, let me not make it too complex. What is the structure of this market based on what we just talked about? Who can tell me what is the structure of this market? What is the structure of the market? Yes, I'm waiting. What is the structure of the market? Mr. Kenny, Mr. Rag, what is the structure of the market? Based on the explanation, market structure that we talked about. What is the structure of the market? What is the structure of the market? Thank you, Mr. Rad. Thank you, Mr. Rad. We can see that the structure of the market is a nice downward trend. It will start from here, which is the highest point I can see the market started from as at this point. This is the highest point. And I could see that this was around the lowest point. But what happened? You notice that the market ranged for some period. It ranged. And what happened? When it ranged a bit, it formed this new lower high. And what happened? Price broke this point from here. It came back to retest and it broke it again. It broke this point again, coming here. When it came back, it did not come back to this point. Look at it. This is where price went again, and it broke it again. Look at it. Now, at this point again, we saw that the market ranged a bit for some time. The market ranged a bit at this point again. Market ranged. Look at it. Price came, went back, came here, went back, came here, went back, came here, until it broke it here. And when it broke it, we saw that price came here, it went back, and it ranged a bit around this side. The only difference is this ranging is not an horizontal range. Look at this. Can you see? See another type of range. You can see, this is just a rectangular range, but there are different patterns of range. Look at this. This is another range. And what happened? This price broke it here. It came back again to retest, but it did not get back to this point. And look at it. It went up again. And since then, we can see that the market It came back again. It broke this. It formed a new one. It came back here. It did not come back to this previous higher low. It didn't get back here. Look at it. This is where it went. And it broke it here. Look at it. It has given us another new low. So now we can see that the most recent point is this high and this low. So if the market comes back and did not get to this point before it reverses, then it means that a downtrend wants to continue. But all you need to do is begin to wait now between this high and this low and see what the market will do. If it breaks this low, then it's going more down. If it breaks and breaks this low, it's going another up. Please, Mr. Rag, do you understand how to identify market structure based on this? You can see I have just defined a market structure now. Let me look for another example. Yes, good. Let me look for another example. But this time around, I want to now combine two things, support and resistance. Now, one thing I want you to understand is this. The beginning of a market structure is always support or resistance. When a market structure wants to begin, it begins from a support or resistance. Now, let me explain what I mean by this. Okay, let me look for I'm trying to wait. Let me look for major support. Okay. Let me use this, move this object. Now, look at this. On a weekly time frame, we can see that this is a major support or resistance. How do we know? If you look at this, when the market got to this point, it dropped. 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 Now, before the market got to this point, we can see that the market has been, okay, we clean this. Before the market got to this major resistance I drew, we can see that the market has been on a nice upward move. But the trend changed because of this support. And that is why it is important that you are able to identify a support and resistance on a higher time frame. Now, for someone that has been trading the market structure from this point, if you did not observe or you are not able to identify that there was a major support here, you will think the trend is still on an uptrend. So we could see that before now, the market has been on a nice upward trend, but this trend changed because of the presence of a major support here. And the moment price got here, what happened? We could see that price broke. If you pick this now, let's pick this. If you pick the before now, this is it. We notice that this is the highest point and this is the lowest point. Price got here, look at the price got here, it came back, it did not break it, it went back again. It came back, it did not break it. It went back and formed a new lower high at this point. Then what happened? Look at it, it broke it here. It broke it here. It came back, it did not get to this point and formed a new lower high. The only thing is, this move is not a nice move. I will show you the ranging, but it's forming a new lower high. Look at it, it came back again to form a new lower high at this point. Look at this. And what happened? from here, price came back again. It did not get to the previous lower high. And now look at it. So now price is possibly going to break this point before it reverses again. Now, but the only difference is the rate at which this downward move is forming is not a nice downward trend. And that's why we'll now call it a ranging market. And let me try to now identify the ranging market. It is ranging like this. Look at it. Look at this. If we go this on the lower time frame, look at it. We notice price get to this point, it went back, got to this point, it went back, it got to this point. But if you look at it, we can see that we have a support here. And that was what made the price not to get to this point. It got to this point, it went up, it come back before it broke it and went up. So what this means is we have another support here. So it's possible price from this point could do something like this. Price could do something like this, come back here again. Then what happened? We could now go back again before it gets to this point. But from here, we can see that the trend has changed from an uptrend to a downtrend because we can see a major resistance at this point. So it means that the beginning of a trend is determined by a support or a resistance. So if there was no major resistance here, there is possible the trend can still continue to go up because of this major support and resistance on a weekly time frame. That is why the trend changed. And that is why I do tell people, when you are trying to draw a support and resistance, it is good for you to pick a support and resistance on a higher time frame. That is a weekly, if possible monthly. Then identify market structure on a much lower time frame, which will now guide your entry level. Please, do we understand this? Any question? Any question? So we've been able to cover the topic, support and resistance, as well as market structure. So please, Mr. Rag, I want you to practice based on this. Please practice it. Practice it. Try to practice everything we have taught. At this point, it is now practice that improves your knowledge. So what I'm going to do is this. To help you, Mr. Rag, I'm going to drop my number. I will drop my number on the chat. So when you practice, you can always screenshot your chat to me on WhatsApp. I will look at it and advise appropriately. I know this will help you to also improve on your learning. But do you have any question? Do you have any question?